Welcome to the Traders Show. This episode is brought to you by Paperstone. Hey guys, what's up? Welcome to another podcast episode here at the Traders Show, where we're going to give you insights about what we think about markets. We're always talking about trading, our trading experiences. Sometimes we bring for you guys interviews with people where we talk about people's journey and how they grew in their trading career and other fields apart from trading. But today we'll be talking about the process of becoming a profitable and experienced trader. We'll talk about the stages that you need to go through. Every trader must go through. You cannot skip any stage. So we want to expound on those stages so that you guys can get to know from our discussion which stage you are in. Because it's just like more or less like going to school. You normally have 5 years in school and you normally have those different stages. First year, second year, third year. So today we'll talk about 6 stages. So about 6 stages of trading that you need to go through before you become an experienced and profitable trader. But apart from that, I hope you guys are well. For those who know me and for those who do not know me, my name is Caleb. My boys will introduce themselves before we jump straight into the podcast.
Okay, greetings people again. Welcome welcome to this podcast. Caleb has introduced the topic. A very, very important topic for us to shed some light on. I think a lot of people are lost in terms of how they think their trading journey will be. A lot of people fantasize about how their trading journey will be, and it's for us, with our experiences, with learning from people, with being around traders, both pro traders and also us experiencing the fact that we also mentor people. We also have that side also of how people think about markets, like our young traders think about markets, and it's important for us to highlight. Of course, not every journey will be the same, but there's some similarity in trading in almost all great traders or how they grew into trading. So that I think it's better for us to highlight how we believe someone can grow into trading, the stages you need to go through, basically the patience that you need to develop as you try to go through the stages of trading, realizing it's a journey, not one day thing, not as people say, the get rich quick scheme. I think that's it. But yeah, it's a whole career, as Caleb has said, like any other career, medicine, engineering. You have stages. You're in first year, second year, third year, fourth year. You do your projects. You get into interns. You get into maybe an internship. You develop a career basically, and trading is something that people should think about it as a career, not just as something that you come into it and make money. So it's not a money making machine. It's a career for people. So there are a lot of people who make money just not from trading, but being around traders. It's a whole industry. I think people should understand that about trading. It's very important for people to understand deeply about how markets work also, and the fact that it's. I think most of the money in the world is in the markets, right?
Yeah.
So I think most of the money that is running in the world is in the markets. So it's very important for you to understand how these markets work. For you, maybe as a trader or not even as a trader, you get to learn a lot about how things work around the world. So I think it's very important for us to highlight, maybe if you want to be a trader, if you want maybe to develop yourself, maybe you're a newbie trader, maybe you're somewhere in the middle, maybe you're a pro trader also, or maybe even you're very experienced. Of course, you're always open also to learning from other people. So it can be an open discussion. You guys can comment what you feel about it in the comments, and maybe what we will talk about in this podcast. You can also challenge us also in the comments, depending on where you are at in your level of trading. My name is Atara Slawi, and I'm glad to be joining you in this podcast.
So hello traders, welcome back to another episode. So as my two friends have said, today we're going to talk about the different stages that you normally go through as you develop in your trading, from your starting point all the way to where we are and also where we want to go. Because as much as we are at a place, we also have some goals of where we'd love to go, and we'll try and shed some light on what really happens at different stages, how people tend to think, especially because I think in general, like I personally, when I'm taking people through my strategies or how I'm trading during the classes at our office, I normally tell people that what I'm going to share with you is how I personally think markets work. So this is my own understanding of how I think you can make money in this game. Like this is what I think if you do, you will be able to consistently make money. That does not mean it's the only way you can make money. That does not mean that it will be directly in line with what the other person next to me is thinking. I think in fact there's a high chance that your trading will also be diametrically opposed to the people you'll be trading with. There's a high chance if you have developed your own way of looking at markets, then you may find that at times you even have different ideologies or different opinions or different times of being in the market. So there are people, like we were looking at that quant analyzer, and we realized that Lowry's trades will always end on Monday and your trades will always come on Thursday. That tells me that you guys have different ways of, even if you were going into a flow, probably you'd be coming to the office on Wednesday and he'd be done by Tuesday. Okay, that's how you think about markets, that's how you trade markets. So I think that's what we're going to share with people today. And if you look at what markets did like the past week, I think also that's quite interesting. This week has been quite volatile. Inflation came out, markets dipped for a bit, and we had a strong rally. And then on Friday we had again another collapse. So if you look at gold, we had a move from about 1675
to about
1650.
40 something.
45, 44.
Yeah, 45.
Yeah, so those were the closes. Oil
Then
came
back
back
up.
from, then it went back up, then came down again
I think it dropped about 4%
yesterday. Yeah, so oil is quite down also from about 90 and 92 to traders low as 87. The pound also, the pound is also quite volatile right now.
For the past
So
few months.
For the past, about 2-3 months because of what's going on in the UK. So it normally jumps around a percentage plus these days, and it drops almost the same percentage. Yeah. The dollar also doing the same. So we can say that pretty much this week we didn't have much of a trend. It was just much of a consolidation. So markets jumped
Markets
between some
consolidated,
levels.
made a noise, then
Yeah, they consolidated half of the first before inflation.
Yeah.
And after inflation, crazy volatility. And I remember when the volatility came, I was telling Ken that I'm sure many people have blown accounts.
Yeah.
That
So
if you are caught off guard and you didn't have proper risk management, you're
That's
blown. And I remember I was also sharing with the trades I've been taking. I had a trade on USD card. I was short. And USD card moved the day that trade hit me with my stop loss. I lost less than 1%. That market moved in the opposite direction of my trade, almost 1.5%. And I was telling Ken, our risk management is very good because if market moves 1% and I'm leveraged,
yes,
and I lost less than 1%, then risk management very good.
Yep.
Yeah, so that happened. Didn't fight to the market. Took that L. Move on. Don't fight to the. It's been long because I remember market went so much against me. Close. You remember I showed you closed as a shooting star. Very strong USD card. You can check that out. Strong shooting star. And then the next day, back up.
Yep.
Gone. So if you fight such markets,
and I think that's one mistake we used to make.
long time.
Like we will try to trade the move up, the move down,
The move down, yeah, exactly.
and even right now you'd be in the market. Okay.
But I think I try to teach my students around fundamentals, around like not being very active during the news if you are not in the markets already earlier.
Yeah.
Like trying to trade during that news hour as a retailer is very risky.
Difficult.
Yeah, very
It's risky
difficult,
because one thing people don't pay attention to during news times, spreads are crazy.
Yeah, spreads are crazy.
It's costly.
It's very costly. Yeah.
Because you just want to jump in, fear of missing out. Market is moving up, down. You jump in, big spreads. You've not even because with small accounts, like people can't really notice.
Yeah.
With $100, $500
Can't
accounts,
notice. Yeah.
you won't notice. But when you start sizing up, you'll notice.
Yeah.
That's when you realize it's costly to do
Very
something.
costly.
Yeah,
Very
true.
costly.
And that's one thing I also try and tell people. I always tell people, if you're going to get into trading, the goal should always be to think about trading $1 million, $10 million, $100 million.
Yep.
Because that's the only way it makes sense to partake on this journey.
Yeah.
This thing is too hard for you to just
I
do
think I
it.
also pass that along to my students.
Yeah,
But they don't understand.
I think
Okay.
it gives them a
Hard to
sense of
understand.
motivation.
Yeah,
I think
give
for me,
them
as
a
I
sense-
teach them risk, when you tell someone, okay, when you risk a percentage of $1,000,
It doesn't look like
just
much.
$10.
Yeah,
you can easily recover that.
exactly.
But imagine losing a percentage of $1 billion.
Uh-huh.
That's what. How
Would
much?
you even allocate
$10,000.
that risk
No,
just
not
anyhow?
$100,000.
You said $1 million or 10 million?
$1 billion.
Or $1 billion?
Yeah.
1%.
Yeah.
That's $1 million.
$100
$100
million.
million Kenya shillings.
No,
You're
it's $1
talking
million.
about dollars, $1 billion.
Yeah, $1 billion.
1% of that is. Or you're talking of 10%.
1%.
1%. It's $1 million.
No,
Yeah,
$10 million.
$10 million actually. Yeah, $10 million. Yeah, $10 million. Yeah, imagine.
$10 million.
Yeah. And that is just $1 billion.
That's 1 billion Kenya shillings.
If you compare
$1 billion.
if you compare
You're
$1
risking
billion,
$1 billion
if
daily.
you compare $1 billion to no, you're risking a percentage of $1 billion, and $1 billion fund is an achievable.
That's a
goal.
small fund.
That's a very very small
That's
fund.
a small fund.
That's a very very small fund. And imagine now that is the risk you're taking. $10 million risk. Will you just wake up
and just allocate it somewhere? You won't be disciplined. Like if you think about it, it's very even hard for you to attain that goal if you're not disciplined. First of all, like you'll have to be a different person. Because see, if you have that cash, first of all, you evolved to the point whereby hawezi kuona mkanga tu
exactly.
Hizo errors uliachana nazo kwanza.
Should put yourself in those people's shoes. Try and trade the same.
I think for me on the markets, I can say for this week I've had it was a very very tricky week for me to trade, and it all came down to now me thinking about selectivity. I think I had a couple of setups to partake on,
but you missed you bypassed all of them.
Not really. I didn't bypass all of them. So I thought about like now, that is what I try to teach my students about trying to combine your fundamentals with your trading. For this week, I knew dollar. Like I had a potential trade on GU and GJ. You see, so those two trades are the trades I'm trying to partake for the week. On Monday, also there were also some indices, but I was not so focused on the indices. I was most focused on those two currencies. So both trades actually offered a very very perfect magnet trade. I think for my students they can understand what is a magnet trade. And I chose to take GJ, not GU. See,
because you understood yen was
like there was no yen news for the week, but there was a very strong dollar news for the week.
Yeah.
So that meant there was less fundamental risk on GJ than fundamental risks on GU. And I chose to take a trade on GJ.
That trade worked.
That trade worked. GU failed. GU came almost close, almost 70% to P, then fell all the way to stop loss. If you remember the first, almost on Tuesday, I think pound fell. Then it came back again. Then on Wednesday, Thursday, it boomed.
So
and yesterday, and then another. Exactly. It's about like being selective about markets. Like,
and that's the same thing, like you're saying you teach your students. That's the same way you also teach them in terms of when we're doing the back test and strategizing. Selectivity.
Exactly.
Quality of trades.
You don't have to take every trade.
Because also me, you remember when I was showing you, I had the Aussie dollar and USD card. I was looking for Aussie dollar to go. Remember when I was showing you that?
Action.
Yeah, also I took one.
Because psychology you have to sometimes stay out of markets 2 weeks.
Hey,
2 weeks.
So you'll be bored.
And I broke that down on the video that we've just uploaded on the How I Made series of how I waited 2 weeks before I got my first trade after passing MFF. And that trade sorts you out for the whole month.
Yeah.
Just one trade selectively and you're done.
Because
people have small accounts, so they think action, I need to trade.
Yeah.
But when you have like $100,000 account and you just make 5%, you have $5,000. 500K.
Yeah.
Who's paid like that?
MPs.
Yeah. So I think that point was one very, very good technical and fundamental lesson that I gathered for this week. Like about, you don't have to take every trade for you to make money.
Because I also had a setup on GU and Euro Yen, and I also took Euro Yen. So I bypassed GU also. Took Euro Yen and
now actually
I
also had Euro Yen, but the fact that I had GJ, I couldn't take Euro Yen. You see,
because that's
against my trading plan.
Yeah,
Euro Yen also worked.
Okay,
of course, Euro Yen and Pound Yen are very, very almost very, very correlated.
That trade of mine worked.
Euro Yen worked, yeah.
Also, I bypassed Aussie dollar, took USD card, which I lost, and if I took Aussie dollar, I'd have also lost.
So double tradage.
And you see, like that's one thing with bypassing trades. You see, like the minute you decide I'm not going to take this trade, and then you observe the outcome, it really gives you confidence to be more selective.
Yeah,
because you're like, hey, this couldn't be in
and selectivity is not a bad thing.
And that's what we're going to talk about today in the process of becoming a trader, because the last process is becoming an experienced trader. the process is
And that's,
you cannot.
that's another question now that I'd ask is, do you also believe, like, in line with what you're just saying, do you believe like that selectivity comes as a function of experience
Yeah,
in the market?
That's what I was going to say. Yeah,
Rather than
and
your
that's what-
system.
Like
That's what we're talking about.
me
earlier.
knowing
That was
those
your
two things,
conclusion.
like GJGU, this has this new, not many people know.
Siken, that was your conclusion earlier on in the weekend. Remember you told me.
Niliambia
At the end of
kale,
the day,
I don't think it's technicals that make you money in this game. It's a big understanding of different
experience. Because what you did
Experience.
to us, that's experience.
That's a
You've
very,
done
very-
it many
very
times.
experience.
Hapa nikichukua hivi hivi.
umelose mpaka ukaona ufai kufanya hivyo.
Yeah, don't take everything that comes.
And talking about that, I can
Kickstart
introduce
the process.
so that the people can understand. I'll start. So there's this beautiful book we've been reading. It's called The Art and Science of Technical Analysis by Adam Grimes. I suggest that book to every trader who's starting out, especially if you're a technical analyst. Read this book. It has a lot. You don't have to take everything from it, but take what you can from it. So there's this topic called the process of becoming a trader, a profitable trader.
Paperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Paperstone Markets Kenya is regulated by the Capital Markets Authority. To open an account with Paperstone and begin your trading, click the link on the description below.
So this is the introduction, yeah? He says, the challenges of becoming a trader are similar in many ways to those faced by doctors, lawyers, or engineers, in that a period of education is followed by a grueling period of apprenticeship and on-the-job training. Many people give up and fail at some point in the process and move to other careers, but some make it through and become competent. Few still achieve real mastery and rise to the top of their profession. The elite in any disciplines are rare. Trading differs from those careers in that the path to mastery is not as clearly laid out, and there are no prizes for second best.
Either swim fiti ma waache kuswim.
Hakuna runners up.
Hakuna katikati. Average trader haiwork.
In many professions, people can develop the skill to become competent but not exceptional and can make a good living from it. In trading, especially for the individual trader, only the superstars make substantial profits over a long period of time. Okay? So now he lays out a roadmap of the typical path of trader development. Okay?
That's some powerful intro, but now
It's powerful. I got it here, even said this is a great way to start a speech. So I'll outline what he says about different stages, then we'll expound on it. So the first stage is what we call the pre-trader. Everything is new at this stage. Everything is difficult. This is the point where the trader is learning the very basics of charting and market structure and is also just starting to explore the marketplace. The trader at this stage has no business actually placing trades because emotional charge.
Hata kufinya.
emotional charge.
Hafai kubai.
Listen. Because emotional charge will hinder the learning process. And losses are virtually assured. Most traders
100.
Most traders should probably spend 3 months or so in this stage. Paper trading, which is basically demo trading, has limited utility, but it can be useful at this stage to acclimate the trader to the process of making decisions under uncertainty and response to the market movements.
Yep. Asa.
Sasa mimi niko hapa kusema tu story.
Tell us.
Because that is true, Ken.
Very true.
There was a period of just trying to before you
Remember,
even,
yani before to trade.
Like I remember the first time, I think I've said this in a previous podcast. I used to have IQ options or something. Then I saw MT4. It was very complicated. Nasema everything looks difficult.
Because I'll introduce nikamwambia start
MT4. MT4 looked difficult. Yeah.
Knowing when to buy. Ati indo buy indo lots. Kuelewa lots tu. Hiyo time unadhani sasa nikielewa lots.
You're gone.
Indicators, everything is so new. You are trying to gather books around.
This way everyone is at baby pips.
Baby
Hapa
pips
bado
around
unafikiria
baby pips.
RSI na work.
You think everything works. The moment you learn this, you think it works.
I was telling another student of mine about the indicators. You remember parabolic SAR, MACD, RSI, stochastics,
And we've used all of
Ichimoku,
those.
Kinkohio,
There's nothing that is new to
Those vitu zote umetumia.
I've tried using them, yeah.
all of them.
All of them. And then you end up only using one or none.
I may
I
have
use
none.
none.
Use pivots, bro.
Okay,
Because an
that's the only
indicator.
indicator I use.
Yeah.
0 and use one,
Me only use one, yeah.
Also, maybe I have one.
just one.
The rest is price action.
Yep.
So if you're starting out as a trader, just know you're at this stage. Everything is new. This stage, don't
Like,
think about
yeah,
making money.
Don't think about making money.
Yo,
Just,
see, go,
yeah.
on the
Maybe.
land.
And the
Yeah.
and the example I use is like, because remember we're talking about the process. It's just like going to study medicine. First year, second year, third year, aufikiri kutouch body. Also you hata ukipewa utasema no.
Lazima
no.
unakula
You're just
theory.
learning theory.
Theory.
Just theory. Yeah, exactly. Like you're reading
Yeah,
books.
you're reading books.
You're watching YouTube videos. You're
But
listening
somehow
to
when
podcasts.
it comes to money, people think they can act different.
Exactly.
And that's the thing,
And that
like-
is one thing that I can also, let me just interject you, Kiasi, too. I can point this out clearly to our listeners and also to maybe our potential students. I see a rush in people trying to come and learn and make quick money after maybe learning a course. For us, we are here to just show you basically the map of how you are going to learn.
How you're
or
going
how
to
you're going to
develop.
develop as a trader.
You're a guide.
Yes, I'm just a guide for some period of time. Then I tell you, okay, now I think you're a bit stable. The same way like your parents were like a guide for 18 years.
Then they told
And
you.
after 18 years, they told you, I think,
Start to make your
Yeah.
decisions.
I think now ukitoka hapa, I think you are more sent to make your own decisions. That is the same thing about trading. It's all about how you go and develop yourself.
Yeah.
Your parents didn't assure you that you will go and become successful. They told you, my son, go and do this and this and this and this, and probably you will get here. If you do this and this and this and this, you won't get.
Yeah.
Maybe probably you'll end in the other side of the road. Yeah. And that is the same thing about trading. Like, don't think that mentorship is what will make you now
Successful.
very, very successful.
And that's the question most students ask when they're coming to take our course.
Yeah. Someone asks, like, exactly. So after I finish this course, will I make money? You know, it fascinates me a lot. Like, of course, yes, there's a potential for you to make money. It's there, but there's no surety. It depends on how you go and develop yourself now from there.
From there. Yep.
Exactly. So it all depends on, will you now take it to make sure these things you need to spend time on. Like, you need to make it at a point your own career.
Yes.
It can't be a hobby. You see.
Mm.
In the moment, I think now the fact that lesson comes later in the classes, I think they now come and realize, okay, so I think most of our students after now the classes, they now have a different perspective.
Reality.
Exactly.
Yeah, exactly.
Exactly.
And we showed them how us were performing, and they see, okay,
Exactly.
It makes sense.
This makes
And
sense,
how much time it took. And I think that is, if maybe a trader can have a better reality of what trading is before they try to come and get into trading, that will really, really shorten their time.
Learning curve.
Yeah, or their learning curve. Because most people come into the markets thinking they will make money quick. If you come into the markets realizing, I'm coming here to learn, you realize that your journey becomes very, very short. I was telling Ken about a friend of mine who has been who recently got into an investment bank in the UK. And this guy, I got into the trading team as an intern, and he was given $100,000 as an intern to trade.
At Morgan Stanley.
Yeah, Morgan Stanley.
was given how much?
$100,000. He
Sikia
was
goal
told,
sasa.
your goal is, don't make any money.
Bora tu si lose.
Just don't lose it. You see, just don't lose it.
Oh yeah, that's the friend of yours who's
Yeah.
abroad. Okay.
You see, now that is, as a trader, that's just come with that mentality into the markets.
As in risk kwanza.
Yes.
Protect the
The
capital.
Protect
downside.
the downside first.
Before tu ufikirie kumake dough.
Before you think about making money, think about, first of all, how do I not lose everything?
Yep.
And that is, I think, if you can come into the markets, I think this podcast, I think, should help people now. I think if you're new and you're listening to this,
Come with that mentality.
it will maybe change your mentality. I
Because
think
even-
it's an important thing to pass along.
Like, I find it very, very funny when, like you're saying, like when you're asking someone, okay, for how long have you been trading? Like, let's say a month or two. Then I ask them, okay, what are the prices of different things? Where did different things close yesterday?
Of course you can't.
And then they're like, sasa sikia. Unajua, sijakuwa active sana juu natafuta capital. Sasa, you're looking for money to come and lose. Because clearly you should be spending more time with the charts. You should be putting like Lawi was saying. I remember there was a time it was just discussions about strategies, how to break down markets. Like you remember, like when you were in the house, we'd wake up, you fix your monitor, your laptop, and the only thing you do that day is to break down this market as much as possible. Ujaribu tuone
hauna trading account.
Uone tu which pattern iko hapa, unachora trend line zako, unachora flags, like that is how you learn how to break down markets. You didn't learn how to break down markets by looking for capital. You can't. These are
learn how to swim when you're just looking for water.
So you need to spend like the first even 6 months. I always tell my students when they come for the psychology class, there's something called a goal. And right now your only goal is to become first of all proficient at technical analysis. Because I can bet money, whatever strategy you've been taught here, you still can't. Ukitoka hapa hiyo pattern utaenda umark vitu yako. You're told this pattern is this way, but since you've not put in enough time to practice how to identify that pattern, you'll start trading now your own things. Okay? Like you have still not gotten in tune with how to break down markets and come up with your own perspective on what's going on.
With the same point, what do you guys think? Because also normally tell my students, when you're trading, there are 3 pillars and you have to do them almost sort of in order. You're open to feedback. 1, understand market structure. Okay, so there are 3 of them. Market structure, number 1. So understand how markets work.
Precisely. That's the question.
Before to fike psychology, nini, understand markets. You can't get into this thing before. Understand patterns, different markets going up, cycles. Learn those things, how markets work. Once you learn that, risk management.
Yes.
Now, risk management will help you when you have capital not to blow it.
Exactly.
Okay, trade kwanza. And then last and most important, psychology. Yeah, now yourself.
Sasa ingia huko, at least uko na ka pattern. Ni madness yako tu ndo correct. Yani
Secondly, risk. How do I not lose?
How do I not lose this capital? Because that's the most important thing. Wezi enda kwa shamba bila jembe.
In fact, that is precisely what you should spend your time on. And you should be asking yourself, currently, what am I trying to improve of these 3? Okay?
Yeah.
When we have our sessions with our psychologist, I always tell her, like, for me, the goal is always to, every day I always ask myself, what goal are you working on in your trading? What are you trying to improve? Are you currently trying to improve on how markets work? Are you, like for me now, understanding how markets work, I have my system, I have my technicals. There's no improvement in technicals. But if I study the last 100 years cycles, I see how markets have been performing each year. I see the history, why markets went up. I see the inflation of the 1970s, where did the dollar trade? Right now, where is it trading? Rates, how high did they go? I'm still improving my trading and how markets work, right? I could also be thinking about, okay, now I have a good system, like you're saying. Now the question should be, how can I position size efficiently to generate a certain return and avoid a certain level of drawdown? You work on that element. Or you're trying to improve, like right now I'm working on trying to see how good I can be at estimating probabilities of where markets are going. And I record, like, I had this opinion, this market is likely to go here. I'm trading my system, but I'm also trying to see, okay, how in tune am I with where this market is going? If I think it's going up, is it going up or it's going south? If I think it's down, is it going down? And if it's down, how down? Did I have the accurate targets? Did I have the accurate picture? I'm just trying to see how in rhythm I am with the markets. Because I always say, that's the flow. You get in the flow of the market. Now you'll find that you're starting out, haujui pillar gani hata unawakia.
True.
You don't know which pillar you're working when you're trying to improve. In fact, you don't even know these pillars exist.
Those 3 pillars. Know them now.
You know them now. Because it will get to a point now you're working on like your psychology and you're like,
because
work on this
I believe you can't be working on psychology before you know how markets work.
Inakusaidia
How?
For what?
Where is the psychology?
Remember when Dr. Brett did a very, very good article on that. And he said, the article was basically, he wanted to coach retail traders. So this is actually what he did. Listen to this story. So he wants to coach retail traders. He says, I want to take up 5 people who I'll coach. But I'm not just taking in anyone. Okay? I'm taking someone has an experience in markets and has some proven strategy of how markets work. So can you please forward to me maybe your research or your journal of how markets really work, then I'll pick.
I think I remember that.
You remember?
That, yeah.
And then
Alisema technical analysis aliona za watu. Atizi hawezi unda do. Hii hauna shida ya discipline. Rudi kwanza technical analysis wewe. Rudi technical analysis. This in pattern gani? There's no pattern here. You don't even have a clear understanding of a pattern. This pattern is not even repetitive. Like you don't even have a precise entry, a precise exit.
Yep, true.
Na umeanza kusema shida ni discipline. Nasema the problem with most traders is not psychological. Some of them have problems with not understanding
And that is why
how markets work.
That is why I always tell people, most likely you just can't say, I've taught you how I trade technically, maybe the setups I trade, and you go and execute them. I tell people to send me some samples of their trades, and almost 70% of them are still not so correct.
Good.
Until I recorrect them. And that is one thing about our training. Like, we always try to correct you even after your classes. But one thing I can say about how people look at markets, that is why I always tell them you have to go and backtest. Because as you backtest, you'll also backtest your own stuff.
Bas.
And you will find now your own repetitive things in your own mind.
Bas. You're also learning. You're learning your pattern, how it's working.
As you backtest, utakuwa maybe ukiona, maybe this certain pattern looks like ile ataras, but the fact that, like, maybe you backtest 20 years, you'll maybe find it repetitive now.
You
on
tell
your
them-
own. No.
Tell them 20
And now
years
you will
data.
come and trade it
Ataki.
on your own.
Exactly.
So you no matter what I'm saying, you just can't skip maybe at maybe backtesting. But I think you iko late in the stages. You iko huko kwa
Because I remember there's one
So we'll get to
student,
that.
Mbele,
Yeah,
mbele.
there's
we'll
one
get into
student
that.
who asked me, Ken, umenifunza hii strategy naona ina work. Umenionyesha backtest yako, your backtest is good. Uko na over 500 setups. Why do I need to do it? Why do I need to say? See, you have the data.
yeah, it needs sasa kufanya hiyo.
Sasa ni kubuy na kusell. So I told them, no, you're looking at it the wrong way. As you go and backtest this pattern, you learn hivyo venye leo anasema. You learn different things. Okay? You'll even realize kumbe my entries kumbe shouldn't sit where Ken told me. Maybe my entries can be better here. My exits can be better here. Like I'd love for you to learn how to do it yourself. Not to, exactly. Not to just make money. Unaona? Because the next time you'll come, my trading has evolved. Like if you look at turudi hapo kwa pre-stage, ulikuwa na trade aje? All
Pre-trader.
patterns.
Because that
trader, yeah, ilikuwa na zote.
Trader una trade hata opinions.
because what you're saying is even actually good because it leads to the second point. Because the pre-trader, this person has said at least 3 months or so, we normally spend almost that amount of time with our
Hapo ndo bado
students.
watu wanadhania signals zina work.
Bas.
Exactly. Now, novice trader, which is the next stage. So we talked about the pre-stage and now the novice trader with the point you're saying, yeah, is Janasema, he wants to use your data as rookie yote. Now, when you become a novice trader, you've learned the basics. Now, this trader is guaranteed to lose.
Bado. Shida ni mingi.
So his maxim must be stay small. At this stage, traders are not trading to make money. So bado.
Hakuna do.
They are trading for experience and to begin to deal with the emotional challenges of trading.
Bas. Usikie hits.
Introspection and constant journaling are critical at this stage of development, which may last 6 months to a full year. Okay? Mistakes are common at this stage, but there are also learning opportunities, so trade size must be kept small enough that they are not too destructive to trading capital or emotional balance. If the trader neglects this process of journaling and trade review, these mistakes simply become losses and fall short of becoming learning experiences they should be.
Exactly.
Okay? One of the main signs of process in this stage is that the trader will start to lose money more slowly than before. The novice trader is still losing, but losing less often and less consistently.
Exactly.
True.
Because like for me, that's precisely how the first thing I always tell you when you come into my class, I'll tell you, I didn't figure out how to trade this way by staying out of markets. I lost about 300,000. I remember because we had about 1 million. So personally in my account I had to lose about 300,000, but that's where I learned this is the pattern I should be trading.
Yeah.
Okay, because I have a combination of patterns. I was shorting, sometimes I was long, but I had my journal and I always show them this is my journal. You can see my trades. So I always tell people, okay, you've told me you've been trading. Show me your trades, the ones you had been taking. Anna
story.
And after though.
Yeah, journaling is important, and I teach that.
Very important.
And there's journaling, then there's effective journaling.
Exactly.
So I try to tell people the difference. There's journaling, like kitambo when I used to journal was just journaling. Kuandika tu, it's like a diary. My day was good, I met this person, story too. But start writing now.
Yeah,
I met
some
Taras, I learned this. Any case,
journal is
Acha
like
kuripoti
deep
hapa kwa
journals.
karatasi.
yeah, journal effectively, such that when you're reviewing your journal,
It shows you a lot.
you learn from it, just, and that's what this person is saying. Introspection and constant effective journaling, I've added the effective, is critical at this stage. Write the reason why you saw this trade, why you took it, the emotions you were going through. So pure you understand your highs and lows. Okay, you're going up, because sometimes you'll notice that you normally take trades FOMO.
Yeah, true.
I took this trade, the market was moving up, and that's why Taras even was explaining why he took GJ over GU. You go through your journaling, you'll start seeing, hey, I always see these two, I take them all together, it doesn't work out.
It doesn't
So
work out.
journaling helps in future. You won't see the effect of it currently,
Exactly.
but after 100 or so trades,
And that's the same thing. The first journal you should create before you even create your forward test is your back test.
Backtest journal.
I always tell people, send me 100 setups. Hey, I told Demba yesterday, send me 100 setups. Those are like 100 press-ups.
you say that.
Oh, very, very good and funny student.
It's a very, very funny comment. So I
Shout out
was
to
like,
Demba, all the way from Siaya.
Yeah, so he was like, those are like 100 press-ups, but I'll still do that.
He took the challenge.
He took the challenge. So it's always about like, can you do those things? Like, that's the point. Like for me, I always tell people, if you're trading to make money, stop. You won't make money.
Yeah.
You're trading a system. I know you are enticed into this game because you want to make money, but now that you've started playing it, just remember it's how good you can become at the game, then money will flow into your hands.
Yeah, for sure.
So don't really concentrate on the money, concentrate on, okay, what's the process of becoming good at this thing? And it's these things you're saying. So if you don't want to do them, then step aside.
And you're not willing to sacrifice that time.
Yeah, step aside.
Okay, so now, Novice, 1 year.
Exactly.
You add it on the 3 months. It's not
Now-
that it's just accumulating.
You're almost at 2 years. Because, that's another point I wanted to add. Like, this is someone who's doing it full time, like with the way we did.
Yeah, exactly. And someone who has maybe been mentored or something.
Exactly.
If you're on your own
Hii
jungle,
unafanyanga 1 hour
this
per
is
day.
on your third year, novice.
Bado wewe ni novice. Because people even who come to the office, someone will tell you, nimeanza kutrade 2017.
2017.
But sit down with them and you realize,
Hey, this is like a new person.
kuna mengi ya kulearn bado. Yani you're still very, very far. Why? Either you've not been dedicated to your learning. Instead of, like for us, reading has been very helpful.
And consistent.
And consistently. I think you're always, even right now, you're reading for them a book. Okay?
Yeah,
like
true.
you're laying out for them different stages from a book. Now, if you're in trading and you don't want to learn, it's like you're going to medicine school na utaka kufanya units zote. Utaka anatomy uruke lakini uchinje mtu. Hawezi.
It can't work. Yeah, si uongo.
Yep.
Which now leads us to the third
Next
stage,
yeah.
which is the early competent trader. Now,
Paperstone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and quick execution speed.
manza kuwa competent.
Ameanza kuelewa
but you-
sasa.
Hadi umeanza kuelewa it will take time kwanza. Umeacha haraka mingi. Joto imeshuka, roho imetulia.
Sasa, so it's a
Yes,
short
you
one.
wongo.
So what he says, now you become an early competent trader. The first steps towards making money is to stop losing money.
Sasa umeacha lose. Lakini
Lose
uundi
sana.
enda 1% unarudi tu chini. Unaruka 5
Exactly.
unarudi hapo tu.
And at the end of this, what you're saying, you'll see that it's a J curve.
Yep.
When you start, you have to
Jacob.
Go down.
go down. Ifike mahali plateau sasa. What you're saying, una lose. And then before, you
Take off sasa yanza.
So now where we're talking about, you are at the bottom. You've become early competent. So the first step towards making money is to stop losing money. A trader who wins and loses, a trader whose wins and losses balance out before commissions has taken the first step to competence. Reaching this stage may take a year or more of very hard work.
Kwa hivyo nimeweka start sasa. Utadia sasa trading.
At this stage, at this stage, the trader is still losing money every month
uchungu na iko
due to transactional costs and fees. Other fees. So there's that stage
lakini blow up afanyi
which let me combine with the next one, which is because now there's early competent, then there's competent. Now when you become a competent trader, the first stage of real competence is achieved when the trader is able to cover transactional costs with trading profits. And that's what we were talking about earlier. Those spread. You remember when we were talking about volatility ameingia to trade. But when it comes to now trading, you start seeing this transactional cost.
And you know, one funny thing, people think about costs in trading. They only think about spreads, commissions. There are a lot of costs that you have to pay for you to trade. A lot.
Back tester huko.
Yeah, once in a back tester, that is a cost. You have to cover it. It's your cost.
Books.
Yeah, the books you have to read.
Trading view.
Trading view you have to pay.
Go back test.
Imagine how much
Exactly.
it costs for hedge funds to just buy the Bloomberg terminal.
And that's what we were watching.
That's a cost.
Which you can give a shout out to that video.
Like
Go watch that video.
The idea is, when I watched it,
What's that video called?
It's the rich.
Eat the Rich on Netflix,
it's on
or
Netflix.
online.
The story of GameStop, yeah?
Yeah, the story of GameStop, yeah.
It's like, when I watched that thing, I was like, you can't start a hedge fund with less than $10 million.
You can't.
Hakuna pesa ya kutrade.
Even you 10 million ni kidogo.
Kidogo.
Because a Bloomberg terminal, what you see these guys, when you watch Bloomberg and you see kina, what's his name?
Tom Keane,
Jonathan Ferro, those guys, when they're talking, those terminals, whatever they're talking about, costs $20,000.
Yep.
Or more.
Yeah, because it's $2,000. Actually, $22,000 a month. It's about $22,000, $2,200 a month.
A month. Ungenishtua $2 million a month.
2,200.
So for a year, you need about 3 million Kenya shillings.
We set up to.
Just to set
and that
up.
is for one account.
Yeah.
And that's for one account.
Yeah, maybe you have 30 traders or 30 researchers.
You need 30 of them.
Yeah.
Yeah.
They're not like shared.
Yeah. You need
Every user.
So like I was saying, the trader is able to cover transactional costs with profits, trading profits. Most traders find that they begin to develop emotional balance and control at this stage.
Sasa up down usongi na market.
Control kidogo.
Kuna time ukianza huko novice rudi hapo. Ikisonga juu, joy. Chini.
Okay.
Sadness.
And they're not too attached to results and can focus more on the process.
Exactly.
Which is true. After 3 years, I start seeing the process.
Nakubali kwanza.
Sasa kubali matokeo.
Comfortable with it now.
We make peace. Hadi sasa umeacha kuambianga wasi ndaomoka soon. Unatulia tu. Nasema itahappen.
Saizi hapo uongeangi sana. Hapo uongeangi.
And I think Ken asked Kitosh that question about 2 years ago. Yes, Kitosh, when did you become consistent? Kitosh alimwambia hata sikumbuki kupanga.
Anasema it take long hata sijui.
Hata siwezi kumbuka
niliacha count. Ilifika mahali ukaacha count.
Acha kuhesabu bana.
And it's different for different traders. Kasi tunasema this may be third year, but some unasema 5 years,
10.
One of the market wizards, Ken, you talked about it some time back. Was it Mati Schwartz or Michael Marcus?
Mati
Schwartz.
10 years.
Decade. 10 freaking years. So the trader will have established a routine for market review, execution, and trade review. Journaling is still important, but many of the psychological hurdles have been conquered, and attention can shift to understanding how probabilities change while a trade is in progress.
Yep.
Reaching the ameka math kwanza. Usikia probability.
Anza kuelewa. Kumbe nafaa kuelewa
probability. Hesabu hapa ilava ingi.
Reaching this trade may take a year and a half or 2 years for some traders.
Ukiongezea kwa zile 3 kwa zile 4
for 5-6 years.
5-6 years sasa.
Reaching this stage may take a year or 2 years for some traders. Consider this carefully. 2 years into the journey, a realistic expectation is to finally have accomplished the goal of being able to pay for your transactional cost. This may not seem like much, but very few individual traders ever survive to this stage.
So kwanza wafikangi hapo.
By
the fifth year, exactly.
Hapo 2 years tu ushakat kwanza 50%.
And this is very true. Nika to school. You started school. Most of you people, I'm sure you've gone to school, universities. When you started and how you finished, numbers very different.
Sasa tuliacha watu.
Exactly. Also as we left. We started, we didn't finish. So same thing with trading.
University of Trading.
This is market. Exactly. Many people who start.
You don't get drop out university.
Till you graduate.
Drop out university.
So this stage, it's for both traders. We've talked about the early competent and the competent trader. Now, if you're able to survive, like you're saying, see to make cut. If you survive this 5, took how many years?
5 sasa.
5.
2. Because I mean, 5 total.
Got 3, then 1, then 1.
About 4 or 5 years.
Okay, 5.
Now you become a proficient trader. Here, the trader starts making money.
Sasa
5 years.
Month kisha uko na kitu unaweza withdraw.
Here the trader finally starts making money. Errors and mistakes are far less frequent, but when they do happen, they're corrected and reviewed, and the lessons are quickly assimilated. The trader has been exposed to the stressors of trading so many times that they have now lost most of the emotional charge. Ile charge ya kwanza.
Ile imekataa kuenda mahali. Ni kama ilikuwa na deni yako.
Charging ball imetulia sasa.
Imetulia. Sasa uko emotional. And the trader is able to approach the markets in an open, receptive state.
Yep.
Trading returns are still variable and there may be significant losing periods, but the trader is able to match or beat appropriate benchmarks for most periods. As competence grows, the trader can look to manage larger and larger pools of money. Okay? Developing the skills of trading larger size and risk becomes a focus at this stage.
Yep.
So this is the
Sasa umeanza ku focus on growing capital sasa.
Growing capital na risk management.
Like now your goal is to amass capital. And to know now my objective is even to return this level now of return.
True. Unaweza ku make a few coins. Sema instead of making a few coins on 10,000, let me make a few coins on
100,000
or no? $1 million?
Yeah.
True.
$5 million.
Most individual traders still at the same stage. Most individual traders will be able to depend on income from their trading operations at some point in this stage, provided that they have access to sufficient capital. So the way we were saying sufficient
that
capital.
Means
Let me finish the sentence.
Okay.
Lenisha. Expect that getting here may take 3 to 5 years for the average trader.
Sasa mko tano sasa ndio umefika hapo sasa.
Bas. And now that's the thing with challenges.
For the average.
Sasa any an individual. You find that someone has not even learned how to trade na anataka kufanya challenge.
True.
Sasa hata ukiingia huko ndani, trust me, autengenezi do, uko na account ya $100,000 lakini you're losing. It's you entered, yes, hata ulipambana ukaingia. Na hata ukimake do 1 month, you won't be able to make do consistently.
True.
Yeah.
You get
Next
there is no
month
point in going in having $100,000 account, you make 5-6% this month, next month. Then
you're out.
The next month you're out, will below. If you have such patterns, that tells you still have a lot to learn. Like the idea basically is if you're able to generate income consistently from the markets, that's the only way the platform will work for you.
Yeah, true.
And you're only able to do that once you've got into that stage.
Proficient.
Exactly. So kama unajua umeanza kutrade miezi 3 na umejua FTMO before hata ujue kutrade, usahau kwanza FTMO, weka kando.
True.
And let me
spend a
finish
lot
it.
of time.
Let me summarize it. The experience, because experience proficient more or less. Now when you become the last stage, so we've talked about how many? 1, 2, 3, 4, 5. So this is the 6th stage. Okay. It is difficult to imagine a trader becoming a true veteran without living through the complete bull bear market cycle, about a decade in most cases.
Veteran.
A decade.
Sasa mimi nataka nikuwe veteran sasa. I'm now going for the
4
veteran.
years sasa si tunaendea veteran. But then we are
A
towards
true
veteran.
The trader has finally seen it all and has also
Umeona oil 0 120.
umeona kila kitu.
Nimeona Trump, nimeona Biden, nimeona mwingine. Wewe.
Umeona hadi Powell, Yellen. Wewe umefuatilia hii markets. Umeona hadi politics venye ina affect markets.
Mazee umeona Ukraine
Umeona
war,
Ukraine war, umeona
Oil
trade
going to
war,
zero.
sanctions.
COVID.
Umelani ile
Low rates, high rates.
stimulus zikipampiwa 6 trillion.
Mazee
So like for you
Insane,
now
insane.
it's wewe unataka kutrade hujaona hizi vitu.
Now, this trader has finally seen it all and has also become cognizant of unknown and unknowable risks that accompany all market activities. What you're talking about is on COVID etc. It is possible for developing traders to gain much of this veteran traders' knowledge through study at earlier stages of development, but there is no substitute. No is the key word. There's no substitute, capital NO, for experience and seeing markets or events unfold in the market in real time. Even this experienced trader is not immune to losing periods. For instance, it is not uncommon for very proficient traders to stumble in the presence of an outside influence such as illness or family issues. But these traders usually have the control to know when to scale back their operations to limit the damage.
This is now the epitome.
Sasa hapa sasa uko na hata pesa yenye una manage si kidogo.
Hapa
Hapa
you're a true veteran.
So now we are going for the veteran.
Exactly. Now
That is the goal now.
exactly. And it's true to know your stage.
Yeah.
And
But that's now
like
as you've gotten now the
Acknowledge.
experience,
yeah,
yeah.
exactly.
So now you're
Trying
heading.
to amass capital, having goals. Naambia Ken leo hiyo si dream, hiyo ni
It's a goal.
goal that you're working on. Not even
Kusema
a goal
nda
that-
trade
like
50
goal,
million.
sema nitaanza hii goal. You're
It
working
used to
on
be a
it.
dream.
Hey,
Hey,
Sasa
sikia mtu 150 million zilikuwa wewe. Right now it's just like a question of time before you can be able to like
get there,
trade that capital well. So
yeah, and soon by end of next year we'll be trading.
heavily.
Now we are having fund meetings. Those are the main things. We have the trading floor. It's all about how's your trading performance. Because at the end of the day, and we keep saying this a lot, we like teaching you people. We like doing this, giving back. But at the end of the day, our main goal is to trade.
Yeah.
Once we
that's why
trade, everything else trickles down.
the hobbies.
Impact, giving back.
Also
But the main goal for us wasn't
avoiding
to...
staying in the market sana pia usikue active. So you have other things you're doing.
We're working towards those things, trading larger pools of capital, having financial freedom, having time freedom. We can travel, we can do what we want when we want. So at the end of the day, going through those stages, as we've talked about, yes, we've said decades, we've said 6 years, it will take time, but it's
freedom.
very worth it.
Exactly.
Because imagine you're trying to develop a 50-year career in just 10
In
years.
just 10 years. That's the thing.
it's worth it.
Think about it that way. You're going to
in
be
your
trading
20s,
just take
let's say
20 to 30.
20 to 30,
25 to
let me
35.
dive deep.
You're a good trader.
And 10 years is very short, trust me.
It's very short.
Think of it as,
Very long.
also as we took, hey, we are 6 years into trading.
Exactly.
It's very, very short. So don't look at it as, when will I get to 30, when you just be immersed in the process of trading.
And that process comes like, you see the progress in the process.
Exactly.
Like, year 1, you'll notice year 2, I'm not the same as I was.
Year 1.
Year 3, you notice, I was not the same as I was in year 2.
Like this
So
staying
like,
out of markets, hii kitu hatukuwa very good at it. We used to be very active.
I have my journal, the physical book that I share with my students in class. Hey, bro, 4 trades a day in a week.
Asubuhi ilikuwa long, jioni short.
Hata sijui tulikuwa na function aje. It doesn't work like that. It doesn't work like that.
Yeah.
So those are the stages, guys. The process of becoming... We can dive deep into it. We'll talk much about it because we've experienced it.
Yeah.
So we're not talking about something we're hoping one day I'll go through it. We've gone through it all.
gone
We've
through
seen
it,
it.
yeah.
And there's still a lot. I'm not saying tumefika.
And
The journey is
anytime-
long.
Very long.
Yeah, true.
So for me, I'd conclude, but you're done?
Just say.
I'd conclude by saying that, and anytime you see someone trying to tell you that you'll make money $100 a day, you'll make money in 3 months, do follow my signals. If your interest is developing a professional career in trading, just turn back and look for something else, right? But if your interest is making money short term, which is maybe this month and then the next month you give it back all, you can try those things for some time so that you also experience. Sometimes experience is also a good teacher.
Yeah.
You might think we're lying or these people are not saying the right thing. So try it out.
Yeah.
Just say, this guy said if you do this and this, if you buy this robot, if you do this, you'll make money. Try those things, see how they work. And then now you'll understand, okay, so precisely this is how these things work.
Exactly.
You'll have the experience, you'll have the feel of what it means to be in the market. In fact, that's how you learn also. So expose yourself to such things.
See, learn through failure. Yeah, try fail.
Don't fail. It's really nice.
Failure is there. You can't avoid it.
And also, like you were saying, I think from also what you've read, there's a lot of pain in the process of learning to trade. Do not assume that this thing is also just... Learning these things will take you time. It's a bit of... you really have to push yourself. Losing money comes with a lot of pain. Blowing accounts comes with a lot of pain.
For sure.
Zoya pia hizo vitu. Make
Zoea.
peace with them.
Zoea losses.
Zoya hizo vitu. Loweze at least kuvuka hii side ingine. Because also now when you get to the other side, no pain, no gain. Yeah.
Because for me also, I think I can conclude by saying, I think we've talked about, we said this, I think we've talked with Ken and also with Caleb. In trading, if you're not trying to get, if you're coming into the markets and just to be an average person, it's not worth it.
The hustle is too much.
The hustle is too much. Like the game is
Don't this
too
for as a
painful.
hobby.
Like if your goal is not to maybe manage, si lazima kila mtu akuwe ati hedge fund manager, but you can manage huge amounts of capital.
$3 million.
$3 million, 10, 15, 100.
You can do that relatively
Like
easy.
we currently have an investment bank under just foreign exchange trading over $80 million.
93.
Those should be
Say
the
it in
goal
Kenya
currently.
shillings. They need say it sounds
9.3 billion shillings.
9.3 billion shillings. Those should be like your goals. If you're trying to do it managing $1,000 just to make some,
See what it did 10 years.
it's not worth it. It's not worth it.
No, what are you doing it
And I think
for?
actually like your journey won't even allow you to think like that.
Yep.
Yeah, so me always say, I always motivate people like that to tell them, in your first early years, of course, you can't get to that stage.
Yeah.
But in the long term, in 10, 15, 20 years, you can easily manage those amounts of capital.
Yeah.
In Africa, we are just starting out this game.
Yeah.
In the US, we have billionaires from it. In Africa, we have none. The billionaires in Africa, I think, comes from majorly manufacturing and maybe industrialists and stuff.
Mm-hmm.
I don't think there's a billionaire trader, billionaire investment bankers much in Africa. So there's still a very, very huge potential for us to develop the industry. Not just me, Ken and Caleb.
Yeah.
Of course, that is why we are here to talk to people, teach people, try to grow the industry, improve financial literacy around Kenya, Africa, East Africa, everywhere. I think it's very, very important for you to be very knowledgeable about markets. It improves you as a person. Yeah, through the stages you get to develop to become a different person through every stage, and I think it develops you to become a more positive person than a negative person. So it's a very worthy skill. Even if maybe you will not maybe get to the other side, you'll pick some other life skills from trading and from the markets, which is very, very important. I think that can be my parting shot for today.
Yeah, so like Tara said, also I'll finish off. It's a very new industry. We are following what the West are doing. Even the Europe, Asia, they're far ahead, and we're catching up. So those are the stages basically to become a proficient trader. And it's okay not to take this as a career. Okay, for 2 years when it's okay, it's not yours.
Hey, if it's not yours,
Accept. Yes, it learns engineering, so
it was not ours.
accept too.
And that is the good thing about markets also. It gives an opportunity. We think we've said this before. It gives an opportunity to participate even if you're not active.
Mm-hmm.
Like you can invest into the markets. You can
you can invest in
Buy
people who
an
are
index
trading.
fund,
Yeah.
invest in a money management
The
fund.
thing you know now is you have the knowledge.
Yeah, exactly.
You're just not participating. You're not going through those
and that is now
emotional.
about financial literacy. You see, like even if you're not trading, you know where to put your money.
Yeah.
Not just like your money is dead in the bank.
True.
Yeah.
So at the end of the day, it's fine. But for those who really want to go the step, to take that step, we'll be here to give you more talks, more motivation, more inspiration to take that journey. Take that journey with us. Take that journey with yourself. Challenge yourself and go through it. So that's basically it. Allow us to end there because of interest of time. We'll be back with next week with another podcast episode that will entertain you guys and you'll learn a lot from it. So as always say, remember, stay woke, stay financially literate. See you soon.
Yes, said.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.